Good morning, friends. Welcome to the morning podcast with me, Sudeep Shah. In today's podcast, we would be discussing about what to expect in Nifty and Bank Nifty from here on, along with the key levels for both the indices. We will also be discussing on key sectors and stocks that we should be focusing on for the day as well as for the next few sessions. Now, yesterday the frontline indices, both Nifty and Bank Nifty, opened the day on a marginally negative note. It traded in a tight range or a small range for the entire session, with Nifty and Bank Nifty finally losing 0.18% and 0.57% respectively to end the session in a negative note. Now, Nifty mid cap and small cap, although outperformed the broad based indices, and they have gained 0.55% and 0.25% apiece. Now, coming to the macroeconomic variables, if we see key factors such as dollar index has stabilized around 102, 103 levels. US 10-year bond yields have also sustained around 3.94 levels. And this have contributed to the liquidity flow towards the risk on assets such as equity markets, both global and Indian. On the other hand, we should not be losing sight of crude oil prices, which have displayed a slight bit of volatility in the last few sessions because we have seen a broad range of 74 and $80 in the past few weeks now. So it has been volatile in a range. Any move above 82, we should start getting cautious in terms of crude oil prices. Coming to the global markets behavior, if we see, if we do a chart check on S&P 500, the recent performance of S&P 500 has been in line with our expectations, which we have already discussed in the last few podcasts. And it has maintained a positive momentum and also surpassed the 4700, 4730 levels on the upside. And looking ahead, we feel that this upward momentum could persist and potentially S&P 500 could reach a fresh high around 4830, 4850 range, again with this same support level of 4630, 4660 zone on the downside. Coming to Nifty, the immediate resistance now is getting established in the zone of 21,480, 21,500 levels, while the supports are now placed at 21,330 followed by 21,250. So any dip towards 21,330 could act as a buying zone, and on the upside we feel that the markets could now take its time, take a breather and face resistance around 21,480, 21,500 zone. Now, key thing to notice yesterday, despite the markets being in a range or just minor negative momentum was there, but India VIX has risen by 6% and it's nearing its highest levels in the last 8 months, indicating a rise in volatility. So, we should not lose sight of this particular factor. Looking at the Nifty futures data, it can be observed that the index had witnessed long unwinding yesterday with futures losing 0.5% along with the cumulative OI declining by 4.5%. So some bit of long unwinding from higher levels has been witnessed. Coming to the options data, significant call writing buildup is witnessed in 21,400 calls and 21,500 strikes. While on the puts front, 21,400, 21,300 and 21,200 puts have witnessed considerable open interest additions, which gets us to a range of 21,300 on the downside and 21,500 on the upside. Coming to Bank Nifty, the immediate support for the banking index is likely to be in the range of 47,630, 47,650, and until this zone holds, up move up to 48,050, 48,100 could be witnessed, and that is where the resistance also could come in. Above 48,100, if Bank Nifty sustains and if we see a good move, say in ICICI Bank, HDFC Bank, and Kotak Bank, then this up move in Bank Nifty could continue up to 48,500, 48,600 levels. On the downside, if the support zone of 47,600, 47,630 breaks, index can retest its next support placed at 47,300. Now, if we observe the Bank Nifty futures, yesterday Bank Nifty futures corrected by 0.74%, while the cumulative OI also decreased by 1.5%. Now, this implies that there was long unwinding profit booking witnessed from higher levels in Bank Nifty futures too, similar to Nifty. Now, for the weekly expiry from the options data perspective, significant open interest buildup is visible in 47,800 and 47,500 puts, while 48,000 and 48,200 calls have witnessed additions in open interest, which means that the nearby range for the banking index could be 47,450 on the downside and 48,200, 48,250 on the upside. Now, let's see which sectors and stocks were in momentum yesterday. Just a bit about the large caps. Yesterday we saw HDFC Bank, ICICI Bank, Axis Bank witnessing some kind of minor profit booking, but it was the likes of Reliance, Bajaj Auto, both these stocks held on and witnessed incremental gains, thereby balancing the negative momentum of banking stocks. And that is the reason we saw Nifty just having a minor cut of 0.2%. But apart from these large caps, sectors where there was good momentum, it was Nifty Media, Nifty Pharma, as well as the metal index, which had a fantastic move yesterday, gaining 1.18%, 1% and 0.5% respectively. Also, selected stocks from the CPSE group such as BEL, NHPC, NBCC also continued its positive momentum. From the broader market, bullish setups were observed in Bajaj Auto, Hindalco, Nalco, Reliance, HCL Tech, Asian Paints amongst the large caps, and Zydus Life, Steel Authority, BHEL, Fluorochem, Indian Hotels, LTTS, Bharat Dynamics Limited, Deepak Fertilizer, lot of names: UTI, AMC, Hindustan Copper, IDBI, Prince Pipes, Exide, few railway names such as Railtel, IRCTC, Rides, and mid-cap IT names such as Cyient and LTTS. Coming to the FII DII data, in the cash segment, FII is sold to the tune of 33 crores, while DII is bought to the tune of 413 crores. FII's long short ratio in the index futures has improved to 60% as they again bought 1194 contracts of index futures longs yesterday. On the stock futures front, FIIs have sold to the tune of 22,000 contracts, while on the options front, FII squared off almost 31,800 call contracts, and they have even covered their 66,800 put option contracts which they had shorted earlier. So, friends, that's all for today. Thank you all for regularly listening to our podcast and wishing you all an energetic day ahead. Do tune in tomorrow for more market related updates and insights. Thank you all.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.